Hello everyone, and a very warm welcome to the first of our payroll year-end webinars for 2023, covering all you need to know to get through this for the current tax year. So my name's Duncan. I'll be your presenter for the webinar today, and I am joined by a crack team of experts there in the background. So Alan, Calvin, Jade and Ollie, all standing by ready to answer your questions. Let's now take a look at what we're going to cover in the webinar. So I'm going to begin with a brief overview of the payroll year-end process, explaining how most of the information required for revenue is submitted during the tax year, and just outlining what steps still need to be completed at year-end. We're then going to run through the stages of a successful year-end, starting with installing your update. So I'll share some tips on the installation, what to expect, and how to avoid any pitfalls. We're then going to look at finishing your 2023 payroll. So that will include completing the last pay dates of the year and producing your year-end reports. And then we'll move on to setting up your 2024 payroll, where everything is copied into version 27, ready for processing in the new year. We're going to finish with a section on what's new, just highlighting the main changes announced in the budget and other software changes. We will not be covering enhanced reporting requirements in this session, so we'll give it a quick mention in the what's new section, but we are running dedicated ERR webinars, which you can sign up for starting next week. So that is the plan for today's session. Let's get things underway with our year-end overview. So what we're going to explain here is that since the introduction of PAYE modernisation, which was back in 2019, the year-end process has actually become far simpler than it used to be. And the reason for this is the way that you report information to revenue as part of your pay run. So if you take a look at the current diagram on screen, each pay date, you'll be communicating with revenue via your payroll software. Firstly, retrieving the latest RPNs, making sure that employees are on the most up-to-date tax credits and cut-off points for that point in time. You'll be putting your wages through your payroll as you normally would, and producing pay slips for your employees. But then you now send a payroll submission on or before the pay date, and that will send back the information about the payments and deductions that have been made in real time over to Revenue's online service. So this is something that you're doing each and every time you run a payroll, and it means that Revenue receive the information in real time. Now, when it gets to the end of the month, based on the submissions that have been made, Revenue will produce a statement of account. So this is a summary of the liabilities that have come from all of the submissions that you've made under your ROS certificate. That's usually available by the 5th day of the following month, and your employee would get visibility of their pay and tax details also based on your payroll submissions. So they would sign into My Account on the Revenue website, and they can see what's been submitted on their behalf. Now, what we recommend as you go through the tax year is that you run the Employer Monthly Liability Report at the end of each month and just do a quick check to make sure that the totals on that report are the same as the totals on your Revenue Statement of Account. And that way you can be sure as you're going through the year that everything is correct. And that's something that you might repeat at year end as part of your housekeeping, which we're going to cover a bit later on. So because you've done this at the end of each month, when it comes to the end of the tax year, which is rapidly approaching, there's not really much more reporting that you need to do. Now, from an official point of view, the employee's employment detail summary and end of year statement is now provided by Revenue. And the employee would get that by signing into their My Account, and that would be available early in the tax year, usually at some point during January. So the employer no longer gives them a P60. You don't do any P35s. What you can do as an employer is you can produce an employment detail summary report just for your employees' information, and then similar to what they have with a payslip, they've got something to compare with what their information says when they log into My Account. So that is entirely optional. It's not an official form, and we'll show you how to produce that report later on in the demo. So the good news here, I guess, is that there's not much to do at year end other than complete your payroll. and print that report if you wish to. And then you can get things all set up ready for the new tax year, which we'll be covering towards the end of this webinar. So we break the year-end process down into 3 stages. The first one is installing your year-end update. So it's really important that you do this, as this will update your current software with all of the year-end options that you'll need to run to finish the tax year. And it will also, at the same time, install Sage Payroll for 2024. It's going to be version 27, and that will contain all of the settings ready for processing in the new tax year, and it also includes all of the ERR functionality. And as I say, that's something that we'll touch upon, but we do have a separate webinar on the enhanced reporting. Now, the update is available now. It was released on Friday, so you may have seen an email with a link to download it from our help center, and it is now available in the automatic updates section in your program. So at some point you will be prompted that there's an update available. So you'll see the message there on the right-hand side asking you to download a software update, or you can check for updates at any time. So you could log into your payroll now, just go to the help menu at the top and click check for updates, and that will generate the prompt that you're seeing here. So you can then go ahead and download the software. If you don't want to use the automatic updates, you can download the installation file just by following the link here on the screen. So let's take a quick look at what the installation process would look like. So once you've downloaded and you've clicked to install the update, that will close down Payroll if you did it via an automatic update. And then after a short delay, you'll see a license agreement, and then you'll see this screen, which will ask you what type of installation you need. So you either choose this computer, which would be suited to a setup where the program and the data is only installed on one PC. So this is the only computer you use it from, and this is the only installation you need to update. Or you would need to be doing a client server setup, which is what you would do if you have multiple users using Sage Payroll. So you've got centralized data, usually stored on a server, and that is then accessed from a number of different client machines. Just to bring that to life slightly, bit of a diagram explaining how a client server install is set up. So the server is where your data is held, and you would do a server install. So from the 2 options that we saw, you would choose server to start with, and that will update the location where your data is held and the location that is shared with all of the other clients. And then it would be a case of running the client install for each installation that is connected to that data. And you'd actually be prompted to do that if you try to access the data from a client that hasn't already been updated. So this computer, if it's nice and straightforward, computer and data on the same PC, client server install, doing the server first, and then the client installs if you are a multi-user version. Now, the end result is that the update will install version 26.3 for the current tax year, and that contains all of the year-end options, and it should be marked PYE 2023 ready there at the top of the screen. And at the same time, it will also install version 27, or Sage Payroll 2024, which will have its own desktop shortcut, and that is what you'll use once you've set up the new tax year and ran the year-end process. So I just want to point out a few useful bits of information when it comes to installing. So if I just bring these slides down for a moment, first thing I'm going to show you is where you can check your version number. So if you take a look at the top of my screen here, you can see that I have already installed the update because my version is reading 26.3, and it also displays PYE 2023 ready. If I show you my desktop, you'll see that I've got the shortcut for version 2024. But if I try to open this version, because I haven't yet set up the new tax year, what you'll find when you come to log in is that there'll be no payrolls listed. So that's nothing to be concerned about. The reason why there are no payrolls from 2023 listed here is that I haven't completed the year-end process for those payrolls yet. So we will come back to this screen once we've set up the new year. But in terms of 2023, if you're on version 26.3, that means you've installed the update. If you're wondering where you can check where your program's installed, you can click Help and then System Information. So in this example, my program directory is the default directory on my C drive. The data directory is the default data directory on my C drive. And because program and data was installed on the same PC, I did a this computer install. Now, if your data directory is a server path, that means you would need to do a client server installation, starting with the server and then updating each of the client machines. One other tip when it comes to installing the update, and you may have already seen some messaging around this if you installed our last update a few months ago, is that we are encouraging you to set passwords for your payrolls and for your users. And if you try to log in as the admin user and your admin password doesn't meet the required standards, you will be prompted to reset that password before you can log in as admin. So if you haven't installed the year-end update yet and you've been seeing prompts to change your passwords, I'd strongly recommend that you do that before you install this update. If not, you'll still get the prompts in this version, and you will need to update the passwords in both this version and the new version moving into 2024. So there's more guidance on resetting passwords available in our Help Center. So that's about it for the installation steps, but I will just quickly share with you some install top tips for a smooth installation. So when you're installing the update, we strongly recommend that your payroll is either at start of period or end of period. It just reduces the chances of any problems with upgrading the data. Tip number 2, make sure you've got a backup of all of your payroll data, because if anything does go wrong with converting the data, a backup can then be restored. Tip 3, check your program and data directories and make a note of them. So if you go to Help and System Information, you'll be able to see where your program's installed and what the data location is. You'll need to be logged onto your PC as an administrator in order to install the update. So you might need to speak to your IT support if you need an administrator login. And if you do get any issues during the installation, or if you see any messages from your antivirus software during the installation, it would be worth reinstalling with the antivirus disabled, and that would hopefully avoid any conflicts happening. So just a few top tips around the installation. So once you've got that update installed, you're then ready to move on to stage 2 of the year-end process, and that is to finish your 2023 payroll. So this is exactly what it sounds like. It's completing all pay dates within the 2023 payroll year. And if you pay your staff weekly, fortnightly, or 4-weekly, one of the steps you should do as part of this is to check if you have an extra pay period. Now, it's important to note that this will only ever affect weekly, fortnightly, or 4-weekly payrolls. The reason why an extra pay period comes about is that the number of days in a tax year doesn't divide into an exact number of weeks. So in 2023, we had 365 days. If you divide that by 7, you end up with 52 weeks and 1 extra day. And depending on what day of the week your pay date happens to be, you may end up with this extra pay period. Now for 2023, you will only have an extra pay period if your regular pay date falls on Sunday, the 31st of December. So if your pay date is any other day of the week, you will not have an extra pay period this year. So the reason that Sundays would have one is that your first pay date of 2023 would have been Sunday the 1st of January. And then by the time you get to the 31st of December, that will be your 53rd payment if you pay weekly, or 27th payment if you're fortnightly, or 14th payment if you pay for weekly. So that's known as an extra pay period. There are some special rules around calculating deductions, which your program will do automatically. So it'll do it on a week one basis, but it's worth being aware if you've got one. So how can you check if you've got an extra pay period? Well, there is a really simple way, which I'm going to show you in the program. So if you log into your weekly, fortnightly or 4-weekly payroll, you can have a check on your calendar. So start at company payroll at the top of the screen, then come down to here and click onto calendar. The period numbers are listed on the left-hand side, and if you scroll all the way to the bottom, you'll be able to check what your last period of the year is. So in this example, because my pay date is a Friday, my last period is period 52, and the pay date will be the 29th of December. So that confirms that I do not have an extra pay period this year. Now, it's really important that you don't manipulate your calendar in order to create or avoid an extra pay period. If you've got one, you process it as normal, and Sage Payroll will apply all the correct rules to the deductions. If you don't have one, you're going to have one at some point in the future. So that's how to check for it. I haven't got a week 53 or an extra pay period this year. With it being a Sunday, it might be kind of rarer than what it would normally be. But this is what you would see if you do have an extra pay period. So that's a weekly calendar that has an extra pay period on Sunday, 31st of December. And when you come to process this, you'll see a message that pops up to say that tax and USC calculates on a week one basis. And the tax and USC status on the pay slip will be indicating W for that period. So nothing you need to do differently. But check your calendar, see if you've got one. If you have, you have. If you haven't, you haven't. So that extra pay period might be your last pay date of the year. But if you don't have an extra pay period and you pay weekly, there might be a scenario where you want to pay your employees in advance, or pay them early, or even sit down and process your payroll a little earlier than normal. And if that applies to you, this is where a holiday period may come into play. So these are most common with weekly payrolls. You don't tend to see them for fortnightly, 4-weekly, or anything longer than that. And a holiday period allows you to process more than one period at the same time, recording the details on a single timesheet, and it will use allowances for the holiday period so that the employee doesn't end up paying too much tax, USC, PRSI, etc. So when it comes to processing holiday periods, there's two ways you can do it. One option is in your payroll to process each period separately. So you've got a set of pay slips and reports for each weekly period, and then from those reports you'll either be able to schedule bank payments to be made on the usual pay dates. So if you're processing in advance but you're not paying in advance, you can just set your bank payments up to the usual pay dates. Or if you're going to be given them more than 1 week's pay at the same time, you just need to add up the net pay value for each of the periods you've processed and pay it all to your employee as a lump sum. So your payroll records will have separate periods. In reality, the employee might get that pay a little bit earlier than normal. Option 2 is to process a holiday period. So this was the option I was talking about, where you get a single set of reports and pay slips. It allows you to create a single bank payment file. It's one of the advantages of doing it this way, but it does have some limitations. A holiday period must not be used for any extra pay period, such as a week 53. That always needs to be processed separately due to the week 1 calculation, and it must not be used for a period that falls into the new tax year, as that will need to be processed in the 2024 software. So if you've done this before, you might be familiar with how to set up a holiday period. So quick tip, if you want to set one for everyone on your payroll, you can do this at the point you set period by simply increasing the number of insurance weeks to be the total number of weeks that the payment will cover. So that globally assigns a holiday period and uses the allowances for the extra week or so. Or you can set up a holiday period for an individual employee on their time and pay screen just by simply entering the number of holiday periods in the holiday periods box. And if you've got your payments to automatically adjust for holidays, it will double up those payments as well. So you can read more about this on our help centre, but holiday periods may be used, particularly over the Christmas period, for those weekly payrolls. So once you've established what your last pay date of the year is and how you're going to process it, when you get to that point and you've completed your last pay run of the year, all that remains is maybe a little bit of reconciling and housekeeping, and then you'll be able to do your year-end reports. So let's just touch on reconciling reports, and this is something that I did mention in the intro. So you can obtain a revenue statement of account either by signing into the ROS portal or directly from Sage Payroll. And if you run the employer monthly liability report in your payroll, what you're looking for is that the totals on each of these reports match, because that then confirms everything you submitted to revenue matches up with what's stored in your payroll records. So I want to show you how to generate these two reports, how to compare them, and then explain a couple of common reasons why you might see differences. So first of all, we'll run the employer monthly liability report. So first thing I'm going to do is I'm just going to check that my payroll status is at end of period for my last pay date of the year. So it is, in this case, it's week 52, 29th of December. I've completed it, I'm at end of period. So if I then go into the reports option, so other reports just here, I can go onto the company tab, and then you can select this report here, employer monthly liability. Now this report is designed to be able to include multiple payrolls if you submit more than one payroll under the same ROS certificate. So when I go to preview this, you'll see there's a selection window, and if there was more than one payroll for this employer reg number, I can tick the ones that I want to include in the report. So it's important to include the same payrolls in this report that you submit using the same ROS certificate. So I've only got weekly in this example, but if I had monthly as well, I'd be able to tick that box. If I click continue, you've got options of showing quarterly subtotals and PRSI breakdowns if you want to, and then you'll get this report on screen. So as you can see, for each month, it gives me totals for the income tax, PRSI, USC, and LPT, and that will give you a liability figure for each month, and then year-to-date totals here at the bottom. Now, on the second page of this report is some useful information that explains why differences may occur. So they are usually down to corrections or not including the correct payrolls in the reports. So take note of that if you do find any differences. What you're comparing this with, though, is your revenue statement of account. And if you didn't already know this, you can download it directly in Payroll. You can do this by going direct payroll reporting, and then here at the bottom, clicking on revenue statement of account. So similar to a submission screen, it's going to ask you for your certificate details. So mine are already saved to Sage Payroll. It's then going to retrieve the submission totals from revenue. And keep in mind, it will only show you up to the last statement that was produced. So around this time, your November statements will be being produced. And you can see here, I've got figures running January to November. You can ignore the numbers. This is just because I'm using a test service. But the idea here is you would then have a liability figure to compare each month, and you would eventually have year-to-date totals to compare. You can export this as a report. So you can click on export details, and then you can either save that or print it out So you would compare this report with the employer monthly liability, just making sure that everything adds up. So that's something you can do throughout the year. And if you haven't been doing that throughout the year, you can do a little check at the end. That's just an illustration of how you might compare the reports. And if you click on the links in the handout, you can read more about this. If you find just a specific month has a different figure, common reason for that would be you've made a correction and you didn't resubmit that correction to ROS, or you've done a manual correction on the ROS portal and you haven't corrected your payroll records. Or if you're finding that all of the numbers are out, could be that you're not comparing like for like because you haven't included the same payrolls in the report as what you submit through your ROS cert. So that's just a bit of reconciliation you do throughout the year and again at the year end. Other bit of housekeeping I just want to mention, and this is a really useful tool, and for many of you, this will run automatically at the point you set the period, but it's our Validate Payroll Data tool, which is designed to scan your data and identify any discrepancies that could indicate a problem that needs to be resolved. So for this one, I'm going to show you how to run it and also how to switch on the option that it automatically validates payroll data at start of period. And that way you can stay on top of all of this as you progress through the tax year. So a quick demo on this one. To run the tool, it's in a few different places. You can find it in your pay run tasks, or you can go to reports, down to validate payroll data, and then you can click validate payroll data. So this is what you want to be seeing. No issues found in any of these categories. But if it does find something, you'll be able to click on the relevant tab. It will give you the detail of the issue just here, which you'll be able to save as a PDF. That makes it easier. And there's handy links, which will tell you more about any of the warning or error messages that come up. Now, you also have some settings at the bottom of this results window. So if I click on these settings, you can see that I have got this set up to automatically run at start of period. But when it does that, it's only going to show me results when issues are found. So it's happening in the background without me even knowing, and I will be alerted if anything does get found. You can also find that setting if you go to reports, validate payroll data. You've got start of period settings here as well. And this is the setting I'd recommend. So we've done a bit of reconciliation. We've validated the payroll data and we found no issues. It's now time to move on to the year-end process, much simplified these days. So remember, revenue will take care of the official forms, the employment details summary and end of year statement. You as an employer have an optional task, and that is to produce the employment detail summary report. So what is this report? It's exactly what it sounds like. It's a summary of the pay and deductions for the year. So a bit similar to what a P60 was. You've got a few output options. You can save it as a PDF, which you might do if you're saving a copy just for your records, or it can be printed if you want to provide a printed copy for your employees. But there's no obligation to do that. It is entirely optional. So let's take a look at where to find this year-end report. So again, do make sure you're at end of period for your last period of the year. So I'm at end of period for week 52. I can then go to the year-end menu. I can go to tax, and then we've got the option just at the top here, tax year-end reports. So the only report that I can select here is employment detail summary. And then you do have the option of including levers. If you want to see levers in the report, which you might do if you're exporting this and saving it for your own records. So I'm going to do a preview of the report just by clicking this preview button. And you can see here I've got 9 pages. So there's one for each of my current employees. So it shows date of issue, employee details on our payroll, and then we've got the gross pay and the various deductions summarising this tax year. And all of this information should match up with what they would see when they get their official employment detail summary from Revenue. So you can see I've got one here for each of my employees. If I was going to print them out, just go to the print option here at the top, and that will print them all out ready to hand out to the employees. Or I could export this, save it as a PDF. So I'll just pop it on my desktop for ease. And then I've got my copy for my own records. Just a quick tip, although there's an email option at the top of the preview, this report is not designed to be emailed to individual employees. So it's not the same as a payslip, where it emails a payslip with a PIN number. That email option will attach every report that you're seeing in the preview to a single blank email, which you could then share with, I don't know, the accountant or the business owner. So it's not to be used for emailing employees, because you don't want them to receive everyone's. If you did need to generate just one of these forms, just for an individual employee, you could use the sort and filter option. So if I put the employee code in for just one of my employees and then do a preview, you can see this report just has the one page. And then I could, in theory, either export that, save it as a PDF, or I could email that one report, but I need to type in the employee's email address. So best if you print them if you're going to hand them out, or save them as a PDF for your own records. So that's it for year-end reports. Everything else has been done in real time throughout the tax year. So that's 2023 finished. Just as a recap of the steps that we've been through there, we started by checking if we had an extra pay period. So it's weekly, fortnightly or 4 weekly, with a regular pay date landing on Sunday, 31st of December. We've completed our payroll for all pay dates in 2023. It's up to you to decide whether you want to do a holiday period if you are weekly paid. We've done some reconciliation and validated the payroll data, and we finished there with printing the employment detail summary. So next up is stage 3 of the year-end process, and this is setting up your 2024 payroll. So you kick off this task from Sage Payroll 2023. So first of all, you need to have finished processing all periods in 2023, making sure that your status is at end of period or EOP. And then there's a task from the year-end menu where you set up the 2024 tax year, and that will copy your payroll into the 2024 version. Now, as it does that, it will clear the cumulative tax year figures for all of your employees. It will remove any leavers from 2024. So I'll keep them in 2023, but they've gone in 2024. And it will also clear RPN numbers, RPN logs and payroll submission logs ready for your new tax year. But that information is still kept in 2023. So you have still got that as a record in the previous software. So we'll run through that task now. This one's nice and straightforward. So you start by going to the year-end menu at the top. You would then go to tax, and then you would choose this third one down, set up 2024 tax year. You'll see this confirmation message. So click continue to create the 2024 payroll data. So we're going to go ahead and do that. That then copies our payroll into version 27. So Sage Payroll 2024. And conveniently, we can have both versions open at the same time. So if I just minimize this one and double click my shortcut for 2024, it's going to prompt me to log in. So I'm just going to put my details in. You can see that that payroll is now available to select now that we've set up the new year. And then if I click OK, That gets us into the program. And at the top here, you can see our version number is V27, and we are budget 2024 compliant. So that is the new tax year setup for that payroll. If you have other payrolls, you would follow the exact same steps. So run the setup 2024 tax year task. That brings all of the records across. If we take a look at some of the employees, I just want to show you that the RPN number has been cleared. So that's happened automatically. The tax year values have all been cleared, although it does retain financial year values, which we'll come on to next. And then for payments and deductions, again, tax year values have been cleared. Financial balances are still intact. And exactly the same here for our deductions. So that has copied across all of our employees bar the leavers. And just looking at some of the logs. So viewing our RPN log, we should find that that is blank. So there's no new RPNs at this time. We haven't retrieved any in this version, and exactly the same for the payroll submission log. But if you want to look back on any submissions from last year, they are still there in payroll 2023. So what we're going to take a look at next is creating our payroll calendar. And at the same time, if our financial year runs January to December, we'll be able to clear our financial balances. So the financial balances feature has been improved recently in that there is now an automatic prompt to clear financial balances as long as you've recorded your financial year details in your payroll calendar. So it is quite common that the financial year is the same as the tax year. So your financial year runs January to December, and there's a setting in your payroll calendar to indicate that. And it just means that if it does, you'll be prompted to clear financial balances at the point you create your new payroll calendar. Now, if your financial year doesn't start in January, just make sure you've got the correct financial year details in your payroll calendar, and you would see this prompt when you come to set the period for the first period in your new financial year. Now, the beauty about the automatic clear down is it will clear using the most common settings. So just to illustrate some of the information that is cleared down when you choose to clear financial year balances, financial year figures on the pay and year to date tab. So for non-taxable deductions and PRSI, they get cleared to 0. And then for payments and deductions, it's the balances highlighted here. So for payments, hours to date, value to date, and net value to date that will be cleared. And for deductions, it's the employee balance and employer balance that gets cleared, with the exception of reducing balances, which will not be cleared because they need to continue reducing until that deduction is paid off. So hopefully those screenshots gives you some clarity on what values will be cleared. If you report on financial year balances, it is really important that you clear these balances at the right time. If you don't report on financial year balances, it's still a good idea to clear them because it'll avoid confusion if you're seeing really large balances that have never been cleared. But if you want to have more control over exactly what information is cleared, you can still clear your financial balances manually, and then you can choose for specific payments and deductions exactly which columns you want to clear down. So once you've been through that, you'll be prompted to set up your payroll calendar. This just involves selecting your first pay date of the year, and that must fall in period 1 of the new tax year. If you have a monthly based pay frequency, you'll need to choose valid pay days. And then once you've got those dates entered, you'd click update to create your 2024 calendar. And mine is going to end up looking something like this. So those are the steps. Let's take a look at them now. So if I bring the slides down, you'll see at the moment I am running a weekly payroll. So I'm going to do the calendar settings twice. I'm going to do one for weekly, and then I'll show you a monthly example. So what I need to do is go to company/payroll and then come down to calendar. And because my financial year ended after period 52 of 2023, new financial year starts on the 1st of January, it's asking me, do I want to clear them down? So yes, I do want to clear down the financial year balances. I just want the system to do it for me. So I've selected this option. I'll click continue. You can see very quickly there, the clear down of financial year balances is complete. So remember, you will only see that if your financial year matches the tax year. If not, it will take you straight into this calendar screen. So these are the options that you would see if you have a weekly based pay frequency, weekly, fortnightly, or 4 weekly. You might have noticed, so in an earlier update this year, we've simplified the calendar, only displaying the 2 most common dates. But if you want to display the check date and gyro date in your calendar, you can click this box and you can switch those fields on. So you can have all 4 dates if you need to know them, or you can choose to clear any of these and just stick with the pay date. So I'm going to stick with the default, which is pay date and bank date. And what I now need to do is to enter my first pay date of the year. Now I do my payroll weekly, and my employees are paid every Friday. So my first pay date of 2024 is going to be Friday, the 5th of January. So the only valid pay dates for weekly would be between the 1st and 7th for period 1. And it is the date that the employee receives the money that determines the pay date and the period date. The other thing that you might want to enter, if it's different to the pay date, is the bank date, gyro date, or check date. So sometimes when you create a bank file, the date in that process needs to be a previous day. So it's the pay date that gets reported to revenue. If your bank file needed to be the day before, just enter the day before as the bank date. And then when you click update, you'll see it has created the calendar. So it's listing all of my Friday pay dates. I've got my bank date, which is the day before. And if I scroll right to the end, I'm going to have 52 periods in 2024. So I would then, if I'm happy with these dates, I would click on to save, and that will create my calendar. So that's a weekly example. I'm just going to cancel out. And before I show you the monthly, I just want to show you the financial balances that have been cleared automatically. So I'll just use this first employee as an example. On the pay and year-to-date tab, you can see the financial year non-taxable deductions has been cleared, and the financial year PRSI. All of my payment financial balances have cleared down, and most of my deductions have, but my bike to work hasn't. So the bike to work balance has been retained because that was a reducing balance deduction. So the automatic clear down does work for most. If you do want to clear them manually instead, you find that option from year end and financial, and then you can work your way through these 3 options. So back to the calendar. This is a good tip actually. If you need to change your payment frequency for everyone on your payroll, the best time to do it, the easiest time to do it is when you start a new year, because this is the only point at which you can change the payment frequency in your payroll. So if I go to company payroll and then company details, you can see currently this is a weekly payroll frequency. I'm just going to change it to monthly to show you the monthly calendar. And then if I go back into company payroll and calendar, they're already cleared, but I'm going to clear them again. This is setting up a monthly calendar. So there are a few more variables in this one. You do need to choose valid pay days for a monthly based calendar. So first example I'll give you is that pay date is always the 25th of the month, or the previous banking day if that was a non-banking day. So my first pay date in that example would be 25th of January 2024, and then I would select valid pay days of Monday to Friday. So I'm not going to worry about making any of the other dates different, I'm just going to click Update. And you can see this has created a 12-period calendar, monthly calendar, where the pay date has been set to the 25th or previous valid payday in the months where the 25th lands on a weekend. So if you need to, you can alter these dates in the calendar one by one, but it sets it up based on what you've put in as your first period date. Now, if it isn't a specific day of the month that you pay your employees, maybe it's the last day of the month, you don't need to fill in first pay period dates. You can tick the box for last day of month. And then if I update this calendar, it's not going to let me. Right, we're going to put a date in, but it's going to be ignored because I'm choosing last day of month. If I click Update, you can see it's picked the last working day of each month and a slightly earlier date if that is not a valid payday. So we could do something similar, maybe last Friday of the month. And it's picked out the last Friday. But it's all centered around what you put in as your first pay period date and what your valid pay days will be. So that's a monthly calendar. I'm just going to switch this payroll back to weekly, which is what it was originally. And then we can get everything set up for period one. So a quick reminder, actually I better set that calendar up. So this is actually, I'm going to save it this time. So this is my weekly calendar. I'm going to get the pay date to match the bank date. I'm going to click Update. Happy with the financial year. And I will click on to Save. So that was setting up our payroll calendar. Remember, you can select dates to display if you want to bring back the gyro date and check date. And we can now start off period one in the usual way. So we're going to set period one. Validate payroll data will run automatically because we've set that up in our settings. We can then retrieve our RPNs, which will download any changes to tax credits and cut-off points for each employee. And then we can crack on and enter time and pay. So quick look at that. I'm going to set period using the process map here. So it will default to period one. It will show me the pay and bank date from my calendar, the ones I've chosen to show. So I'm happy with all that information. Just going to go ahead and click OK. Now this message that pops up will be quite common around this year. So if you do holiday tracking in Sage Payroll and your holiday year runs January to December, it will detect that you're now in the new year and it will ask you to roll forward the payroll's holiday and absence year. So it's important you do this at the right time. And then you've got a few clear down settings just to review. So decide whether you want to carry forward unused holiday. You're going to be setting the next holiday year start date. And then you can set adjustments to 0 if you take this last one. So this will come up automatically. I'm just going to go with the default options. And you can see now, if you look at the bottom of my screen, I'm at start of period for period one. Hasn't found any validation errors because that ran automatically when I set the period. So what I would then do is retrieve my RPNs. And with this being period one of the new year, you can see I've got some new RPNs pretty much for each employee. And then you can see if you view the details, what fields have changed. So it tends to be tax credits and cut-offs, and the 2% ceiling as well for the USC. So it's bringing in the new RPN numbers for the new year. And if we hit import, that is the process complete. So you can then move on, enter your time and pay, and we are all set for period one of the new year. So that's your process. No different to any other period really, except you would expect there to be updated RPNs for all of your employees. So just to recap this section, setting up 2024 payroll, we have set up the new tax year, which we did from 2023, and that's copied the payrolls over to the 2024 software. We were prompted to clear our financial balances because our financial year ran at the same time as the tax year. And once we did that, we set up our new payroll calendar by entering the first pay date of the year. And then we've just set period one and retrieved the latest RPNs. And you can read more about these steps following the link on screen. So we are now getting towards the end of the webinar, but we're going to finish with what's new in 2024. So first thing to run through is a few of the main budget changes. So we've put some numbers on this slide as examples of the impact of those budget changes. So the standard rate cut-off point for income tax has increased for a single person. That's going up to €42,000. Employee and single person tax credits, they're all going, the tax credits are all increasing. So the example of single person who is an employee would be a total of 3,750. The 2% upper threshold for standard rates of USC increasing to 25,760. And there has been a rate change this year for USC. So on income from that 25,760 up to the 70,044, it's come down from 4.5% to 4% standard rate USC. Minimum wage rates are changing from the 1st of January. So if you're age 20 plus, your minimum wage will be €12.70. So do look out for any warnings on timesheets if you pay hourly for staff that may now be under the new minimum wage. And those changes to cut-off points, tax credits and USC are all updated by retrieving the latest RPNs. There are some changes to PRSI taking effect from the 1st of January, and it's linked to changes in the state pension. So with effect from the 1st of January, employees are not automatically classed as PRSI Class J at the point they turn 66. Instead, their class will change when either they turn 70 years of age or they choose to draw down their state pension contributory. So if they are drawing down their state pension, they get put onto Class J. If not, they'll have to wait until they are 70 years of age for that to happen. So the validation in Validate Payroll data has been slightly adjusted to reflect that change. And I would recommend that you keep an eye on any PRSI classes that come through on updated RPNs. Statutory sick pay increases for 2024, so it's going up to 5 days of paid leave. It's due to increase to 7 days in 2025 and up to 10 days from 2026. The rate of pay remains at 70% of normal wages to be paid by employers, and that is still capped at a maximum €110 per day. So no change to the process. You can read more about processing statutory sick pay from the link. A couple of other items. The construction worker pension scheme tax year has now been aligned to the payroll tax year. So the 2024 year starts on Monday, the 1st of January. So if you do use CWPS, you will need to clear your CWPS balances and history and set up a new tax year calendar. So all the steps to do that can be found on the link. So make sure you do that before period one. And possibly the hot topic, we're not going to be covering it in this webinar because we have a separate webinar all about enhanced reporting requirements, but they do come into effect from the 1st of January, bringing with them a requirement for employers to report details of certain non-taxable expenses payments or small benefits payments made to employees or directors on or before date of payment. So similar to a payroll submission, but you're reporting non-taxable expenses and benefits. It's specifically for the 3 categories on screen, so travel and subsistence, remote working daily allowance, and small benefit exemption. As soon as you've installed the year-end update and you've got your 2024 software, it contains this functionality. It's all built in, and you can register for our ERR webinar, which is starting next week, where we'll give you a run through on exactly how to use it. So that is coming. The webinar starts next week, so do get yourself signed up if you haven't already done so. Okay, so we are getting towards the end of the hour there. We're going to try and stick around to make sure we've answered as many questions as possible. If you think of a question after you've left, I just want to let you know where you can find further support. So a great place to start would be our help centre, which you can find at sage.ie/help, or by clicking any of the help centre icons that you find within Sage Payroll. There is a section dedicated to payroll year end. It's now updated for 2023. So you'll find that on the homepage from Sage Payroll Micropay. You can search for articles. There's a section as well in the year end dedicated to ERR. So do check that out, sage.ie/help, and follow the links to Sage Payroll (Micropay). So last couple of minutes for us to answer questions, which we'll continue doing in the chat. If you'd like a copy of the presentation, please do download the handout, which is available right now. There's 2 versions of that. We will send you a follow-up email, which will contain a link to the recording of today's session. So do look out for that. It'll arrive later this afternoon, so usually within a couple of hours of the webinar ending. And if you see a feedback survey as you leave the webinar, would really appreciate any feedback that you might have to help us improve these sessions moving forward. And that will also contain a link to sign up for our ERR webinars. So I am going to go briefly on mute while we mop up the remaining questions, but I will come back to say goodbye when we are ready to close down. So speak to you soon. Hi again, everyone, and thank you so much for sending those questions through. It looks like we have managed to answer the majority of them, so apologies if we haven't got round to yours. You may well find the answer you need from our online help centre. I am afraid we've run out of time now, though, so we are going to wrap things up. I just want to thank you once again for joining us at the webinar today. Hopefully see you at the enhanced reporting webinars, which are starting next week. So take care out there, and we'll see you on another webinar soon. So goodbye for now.